Divorce really does affect your tax status immediately. Taxes after divorce can get super effing messy. If it's not in writing, then you need to work it out now. Hey, welcome back to the Divorce Revolution. Today, we are diving into something that no one warns you about after divorce, but it can be a friggin' nightmare if you are not prepared. And yes, girl, we're talking about taxes because it's about that time, okay? We are in March and you guys know that April 15th, I think, is the deadline if you're going to file it on time. So if you're sitting there staring at your tax forms and you need a shot of tequila just to open up that TurboTax, like, trust me, I get it. We all know after divorce, worrying about financial stability and financial independence is incredibly overwhelming. The thing is that divorce, we know it does change everything in our life. But the one thing that people don't talk about enough, I think, is that how much it impacts your taxes. It can be really confusing from your filing status to any potential financial surprises. I mean, truthfully, the shit can be overwhelming, but don't worry, girl, I've got you. Today, we're going to break it down. You know exactly what to expect, what mistakes to avoid, and how to get through tax season without losing your friggin' mind. So what's the first thing that I want you to know? Let's talk about some big tax changes after divorce. One thing that you need to know, and I think we all probably understand, is that divorce really does affect your tax status immediately. It doesn't matter if you were married for most of the year. If your divorce was finalized by December 31st, you are officially single, or you could be head of household, like depending on your situation. Now, before I dive into this, so I actually want to do one little caveat here. Listen, you guys, I'm not a tax advisor. I am not an accountant. So I am giving you guys some information that I always want you guys to consult your accountant first. But these are just some things that you might not be considering. And if you are trying to file on by yourself with like TurboTax or something online, these are things that you might miss. I know for me, I'm working directly with an accountant because of my business. But before that, when I was just a straight up W-2, I would just file my own stuff. And so I just want to give you guys some information to think through. If you are legally divorced by December 31st, you can no longer file as married filing jointly, even if you were married for most of the year. So instead, you are most likely going to file under single or head of household. Now, the head of household is if you've got kids living with you for more than half of the year. That's something to think about. So your filing status changes. The second thing that changes that you want to be really aware of, and this is something that you should have negotiated in your divorce settlement, but if you've got kids, you need to double check your divorce decree to see who gets to claim who on the taxes. Like I know for me, Frank claims Shaw and I claim Avery. So any expenses related to Avery, I get to claim. Any expenses related to Shaw, Frank gets to claim. So that's just something that you want to be aware of. Some agreements actually say that you take turns claiming them every other year. So you just want to be really aware of this. And so here's a pro tip. Like if it's not in writing, then you need to work it out now before you both try and claim them. Like make sure you and your ex are very clear on this. You both try and claim them. That could definitely trigger a red flag from the IRS. We don't want that. The second thing that I want to talk about is let's talk straight up money. I'm talking alimony, child support, and different tax implications. Again, the law can be changing constantly. So this was the most up-to-date information I had at this time. Always check with your accountant. I just want you guys to have the information. If your divorce was finalized before 2019, alimony payments are tax deductible for the payer, and they do count as taxable income for the receiver. So you just want to check into that. If your divorce is finalized after 2019, alimony is not taxable income for you, and it's not deductible for your ex. That is something that you want to take a look at that. So basically, look, if you're getting alimony now and it's after 2019, then it is probably tax-free. Okay, so let's talk child support though. That's not taxable. You do not pay money on what you receive and your ex cannot deduct it. But also you cannot claim it as income on your taxes. Now I know that there are certain, because I've run into this, if you're applying for a credit card or you're trying to get a loan or whatever, you don't have to report your child support as income unless if they ever had to go after you to collect the money, then they would be able to go after your child support. What I was told was like, don't ever do that. Don't ever make it to where your child support is up for grabs in case you are defaulting on a payment. That is something just to remember, that child support is typically not taxable. Now let's talk then about some of the hidden costs of divorce that you may not be thinking about. Again, these are some of the sneaky things that could sneak you up this tax season that I want you to talk to your accountant accountant about. So the first one is there may be some tax penalties on splitting assets. If you got a chunk of your ex's retirement account in your divorce, then you may need to file what's called a qualified domestic relations order to avoid penalties. You may need to file something. You may not. Again, I just want you to ask your accountant about this, or I want you to look into this. You may need to file a special form to avoid the penalties. Without that form, the qualified domestic relations order, withdrawing that money could mean a 10% early withdrawal penalty if you are going to withdraw money out of that retirement account, plus your regular income taxes. Again, talk to your CPA. If you got money out of your ex's and you were thinking about taking money out of it, you could pay penalties on that. You might not. So again, just don't touch that money without talking to an accountant. The other thing that you might want to consider, or that maybe you're not considering, is the sale of your home and capital gains taxes. If you ended up selling your marital home in 2024, you might owe capital gains taxes on the profit. So take a look at that. But the good news is if you lived in that house for at least 2 of the last 5 years, typically you can exclude up to $250,000 of profit from your taxes. So $500,000 if you were still married at the time of sale. So again, talk to your accountant if you sold your house and or like you've had some capital gains going on there, then you definitely want to talk to your accountant about that. The other thing that could pop up is maybe some unexpected tax bills, or maybe you might get a refund. That could be a positive though. So if you and your ex used to file jointly, you may be shocked if you were used to getting a refund of how your refund could shrink, or you could possibly owe. I was just talking to a woman just the other day about this, and she had gotten divorced and she had always gotten a refund. And by the way that she filed, she always got a refund, and then she got divorced and she ended up owing money, and damn, did that throw her for a loop. And I totally get that. So just be aware, you may end up getting surprised and get a refund, or you may end up owing money. When you are filing jointly, if you got a refund, don't bank on that. Do not bank on that. One of the biggest pieces of advice that I can tell you though is that bottom line is that if your ex was handling all of the taxes before, please get a CPA and have them review everything. And maybe even if you're used to filing everything like simply on TurboTax or something like that, it just may be worth it this year because things are different for you to go ahead and just hire a CPA. I mean, trust me, you don't want to be on the hooks for tax mistakes. You also want to just make sure that you are writing off everything that needs to be written off. So now that we kind of know what to look out for, here's how to stay ahead of the game. Number one, get professional help if needed. Again, I will just tell you, I highly recommend getting some help, especially your first year, because taxes after divorce can get super effing messy. If the numbers are totally confusing you, or you just want to make sure you're doing it right, especially if you're first year out the gates, hire a tax professional who understands like divorce tax laws, who understands the tax laws in your area, and just get that help. Another thing to look out for is, listen, if your ex's CPA wants to quote, help you out, girl, no ma'am, get your own. Get your own. The other thing that I want you to do is I want you to double check your divorce decree. So remember, who's claiming the kids, who's responsible for any back taxes, maybe from joint returns, what assets were split, and how do they have tax implications? These are the things I want you to think about. I also want you to consider maybe if you're a W-2 employee, maybe adjusting your tax withholdings now. If your paycheck looks different post-divorce, you might need to check your W-2 forms and adjust any withholdings. Make sure that you're withholding enough. Maybe you're withholding too much, just so you don't get a surprise tax bill next year. The other thing I want you to do is, listen, I want you to know your deadlines. April 15th, that's the tax day for most people. October 15th should be that extension deadline if you file for one. So pay attention to that. So listen, you guys, I know this was a lot and it was a little bit more like numbers driven than I normally do on this show. But as you guys know, we have recently done a pivot in the divorce revolution. And so I am so committed to really giving you guys the information that you need to really thrive post-divorce. The truth is, as we know, there are a lot of curveballs, and I just don't want your taxes to be one of them. The more that you educate yourself, the more that you know, the more power you're going to have over your financial future. Just a quick recap. Number one, your filing status changes immediately after divorce. Number two, child tax credits and deductions can be a huge deal. So figure them out early. Get with your ex. Understand what your divorce decree says. Watch out for asset transfers and hidden tax costs. And if you get lost or you're feeling confused or you're unsure, listen, hire the CPA, fact check all the information I just gave you, double check, make sure what is going to be the best option for you. If this episode helped you guys and you found value, listen, screenshot this. Head over to YouTube too. Check out the full video. Head over to YouTube, screenshot it, and tag me over on Instagram. I'm at MS Amber Shaw. And look, if taxes aren't the only thing that are stressing you out when it comes to money after divorce, stay tuned because next week I am diving into why depending on alimony and child support are a trap and what to do instead. Until next time, girl, remember, divorce isn't the end. It's your fucking launch pad, girl.